Hello, my name is Lizette Walsh and I'm one of the private client advisors at IMFG. And today I'm here with Steve Bath, who is on our investment committee to talk about what's happened in the last quarter. Steve, I think it's been a pretty exciting quarter, hasn't it?
It has. It's been an amazing quarter. You know, at the start of the quarter, things actually weren't looking too good. The Australian market was sort of going nowhere. Look at the slide we've got up here. You can see even by October the 31st, as we're into the last quarter, the Australian market was returning a big fat zero. But then something extraordinary happened in early November. The inflation data out of the US showed inflation was falling much quicker than what the markets were expecting. And then the next thing, the US Feds announced that they were done with raising rates and the next interest rate move would be down. Now, the Australian market followed this enthusiasm, and you can see in the chart how in the last 8 weeks of the year, Australian markets just kicked off. So it's actually had an annual return for the calendar year of 12.4%. That's a really good return. It's actually higher than what the average return of the ASX is over the last 30 or 40 years. And of course, nearly all of that return has happened in those last 8 weeks.
So that's great for the Australian market, but what about the international markets?
Well, Lisette, in fact, the international market did even better. Look at this chart here. You can see that the developed markets, ex-Australia, are up by 23%. And most of that is driven by the US, which is up an extraordinary 25%. And in the US, a lot of that is due to the Magnificent Seven that I think everyone's heard about, the high-tech stocks. They've had a huge run over the year. They're up about 50% on the year. But it's not only the US. You can see here that Europe, despite what's going on in Russia and Ukraine, and also Japan, which we really never ever talk about, they're both up more than 19% in Aussie dollars. So the international markets is really speaking to the power of a diversified portfolio to have not only Australian shares, but to have these international shares as well.
And has there been a similar effect in the emerging markets?
Yes and no. If I take out China, the emerging markets have also done really well, but China has just not kicked off this year. So that's really brought down the emerging market index. Not a bad return, but it's really been hampered by China.
And how about bonds? I think it's been better after a tough period.
It's been a tough period for bonds. In 2022, they had their worst return on record. But once again, this pivot that the Federal Reserve saying that interest rate rises were done, yields have fallen, bond yields have fallen by more than 100 basis points. Now, let's say in the bond world, 100 basis points is huge. I know it's 1%,
Yeah.
but it's just absolutely huge in the bond world. And so consequently, you're seeing that both Australian bonds and global bonds hedged back to Aussie dollars, they're up more than 5% for the year. That's better than what you would have got for a term deposit at the start of 2023. So a strong return in bonds. There's still some ways to go to make up the 2022, but they're certainly on the way of making that back.
Thanks for that, Steve. I think that really reinforces what we say at IMFG, that it's good to have a diversified portfolio and stick with it for the long term. Thanks for joining us, and we'll be back next quarter with another update.